Yo guys, FVGs, welcome back to another video. Today we're pretty much just I'm basically gonna be providing you a teaching or showing you guys different types of FVG gaps and having a specific understanding when it comes to identifying FVG gaps and how we tend to expect them to behave, right? With all introductions being said, let's get into it, right? First of all, what are FVG gaps, right? A FVG gap is a price imbalance or a gap that price leaves to indicate inefficiency within a key zone, right? In other words, when we have three down closing candlesticks, right? A FVG gap is the insufficient zone between the first and the third candle, right? When their wicks fail to clash, if I can put it in simple terms, right? In baby words, if they fail to cross each other, then we have a fair value gap, right? And if you can identify within this price range right here, it's from the top red line to the bottom red line, right? So that zone between those two price levels, that's our FVG gap range. And in simple terms, price tends to drop back into those key zones or inefficiencies to rebalance, right? So we use them as key retracement or draws on liquidity areas in which price can potentially draw to, right? So like when we are in a bearish trend and we identify bearish FVG gaps that are called CBs, sell side imbalance, buy side inefficient. And when we're bullish, they're called BZs, buy side imbalance and sell side inefficient, right? And then when we identify the FVG gap high and the FVG gap low, we take our fib, we divide it in half, and then the center point is the consequent encroachment level, right? So we identified the consequent encroachment level, right? Meaning that these are like the three key zones in which price can potentially react off. In simple terms, we have the FVG gap high, FVG gap low, and the FVG gap 50% level, which is the consequent encroachment level, right? So these are like the three key zones in which price could draw to, right? And when we're bearish, for the highest probability shorts, we do not want to see price drawing back into the FVG gap high, right? Right here, we have a measurable gap. In simple terms, measurable gaps are FVG gaps that price leaves and never revisits, if that makes sense, right? They're often commonly within the highs and lows of price. For example, when we're bearish, price draws lower, creating a displacement, right? And then price drops without visiting it even once. Those are regarded as measurable gaps. Price can also tend to drop back to them and then just touch them and fail to reach the 50% level, right? And then just start distributing price lower, right? So that's how we identify measurable gaps, right? And then we have common FVG gaps, if that makes sense. Common FVG gaps are FVG gaps that price can revisit multiple times, right? For example, let's say you're in higher time frame from the daily time frame, and then drawing back into a lower time frame, we have sell side within that FVG gap, and then price draws back into it and then reacts off it twice. We call those common FVG gaps, right? Usually I personally prefer seeing common FVG gaps forming on higher time frames, meaning that I do not want to utilize them as my entries, if that makes any sense, right? And then we have breakaway gaps. Right, breakaway gaps are pretty much similar to measurable gaps, but with the breakaway gaps, right, we do not want to see price revisit the FVG gap at all, right? Meaning that as soon as they also often form within the highest level, the highest premium zone when we're bearish, and the lowest discount area when we're bullish, right? Meaning that after we get displacement lower, if we're bearish, and then there's a FVG gap above price, specifically above the breaker, right? we do not want to see price drop back into that measurable gap. And this pretty much indicates high volume, or price is in a hurry to get to a specific discount zone, if that makes sense, right? And then we have price rebalance, right? These are pretty much breakaway FVG gaps, whereby price can break a short-term low, almost similar to a breaker, right? But this can also be formed on higher time frame, whereby price breaks sell side, right? And then it draws back higher to a FVG gap, which is either above or within the sell side liquidity zone, if that makes sense. The sell side is also regarded as displacement, if that kind of makes sense, right? Pretty much, if you can identify price here within this breaker, price drew lower, right? Leaving a measurable gap and then drawing back into the breaker, right? If price was willing to revisit the FVG gap that's within the breaker, right, which is pretty much the displacement zone, that would be regarded as a price rebalance breakaway FVG gap, right? And now we have inversion FVG gaps. Inversion FVG gaps pretty much behave the same as a normal FVG gap, right? With all those introductions, common FVG gaps, measurable FVG gaps, and all that, right? But with inversion FVG gaps, it's when price fully rebalances them. Let's say we're bearish, right? We have a FVG gap bearish, or let's say we're bullish, right? We're a FVG gap bullish, and then price sweeps it, right? Meaning that it closes below it, and then now we're within a downtrend, if that makes sense, right? We want to use that inversion FVG gap as support to use or drive price lower, right? Because if you can pay attention on this chart, price was technically moving lower, right? And then it formed the FVG gap and then closed above it and then drew back lower to only revisit it again. And then, as you can see, it's pretty much using it as some form of support to drive price lower. So that's pretty much how inversion FVG gaps form, right? They need to be swept twice, meaning that on your current time frame, they identify when price closes within the full range, if that makes sense, right? Personally, I tried making this as quick and as short as possible. Next video, I'll be pretty much showing you how to utilize them in a more specific way, right? This was just a simple introduction or simple explanation on how you can identify these types of FVG gaps. And if you found this video helpful, be sure to subscribe, be sure to hit the like button, and yeah, man, stay safe.